Excuse me, good afternoon, ladies and gentlemen. Of course, I say good afternoon to those of you who are joining me here on the East Coast. We also want to say good morning to those of you who are joining us from the Central Time Zones, the Mountain Time Zones, or the Pacific Time Zones. And of course, we want to say good evening if any of you are joining us from across the pond in parts of UK or parts of Europe. And of course, good early morning if any of you are joining us from Australia or parts of Asia. Welcome to today's presentation, a focus on the search tool. Today we're going to discuss setting up the search tool to sort of match your needs and requirements on the PowerOptions suite of tools. Now, for those of you that are new, what of course is PowerOptions? PowerOptions is a patented suite of search and analysis tools designed for self-directed options investors. Our tools will allow you to search across the universe of options to find only those positions that match your personal risk-reward tolerance in a given strategy. Once you have identified the positions, you can quickly compare the risk versus reward and do further research and analysis on the stock or on the option itself. We also offer a powerful set of portfolio tools to help you paper trade, track, and manage your positions. In addition to that, we do offer countless educational articles, help pages, help videos, and archived webinars to help you get more familiar not only with the tools on the site, but the various option strategies as well. Now this is a little typo here from an older presentation. Ernie Renner actually created the PowerOptions tools back in 1997. So we've been in business for 18 years, but everyone here on staff uses these tools to trade their personal accounts, myself included, so we have many more years of combined trading experience. For those of you who don't know me, my name is Mike Kepka. I'm the Director of Education here at PowerOptions. I've had the great pleasure of working with Ernie Renner and the PowerOptions staff for the past 12 years. I do handle a lot of the coaching sessions, so those of you that are currently on a free trial or on a subscription to PowerOptions, you can register for one of those free coaching sessions at any time. It's essentially a 35 to 45-minute phone conversation. Ernie or myself will walk you through the tools on the site and answer any questions that you have. I have co-authored 2 books with Ernie, and I've done various webinars and seminars, I should say, across the country in Atlanta and Texas, other parts of Georgia, North Carolina, and Chicago as well. Now, I am versed in all strategies on the site. However, there are certain strategies I've never traded in my personal portfolio, things such as short straddles and short strangles, doing a naked call and a naked put together, iron butterfly positions, and just simple naked calls. Those positions don't match my personal risk-reward tolerance, but if you do have questions about those later today, we'll be more than happy to show you the tools on the site. All right, so what are we going to cover today? We're going to talk about customizing the search tool for basic criteria in various strategies as well as more advanced criteria. We're going to talk about evaluating the stock and option criteria as well. Simple ways to search for different expirations, matching your goals for your trading plan. How to create a search for specific needs, such as searching for ETFs or maybe searching for dividend stocks or any other specifics that you might have. And of course, general tips and suggestions. Well, it's a lot to cover, so let's navigate over to the PowerOptions suite of tools. Okay, what we're looking at here, let me wait for it to come up on the screen. Fantastic. What we're looking at here is just the simple view of a PowerOptions trial account. For those of you that are just getting started with your trial, I will encourage you to take advantage of the 4 basic steps that are listed here, of course. I'm going to start off. You can access the quick start guide and the user's guide as well. There are some flash tutorials or sort of interactive tours that you can go through. We have a variety of free webinars we host during the week, as well as many archived webinars that you can view. And then, of course, you want to take advantage of that free coaching session as well. Now, to access the search in a given strategy, we just started our PowerOptions trial. We want to look for new positions. The first thing we have to do is select a strategy. So if I started off with covered calls, I can quickly navigate using the submenu to the search, where we do have some default criteria set up for you to use as a stepping stone to create your own personal search. And in every strategy, you'll also see sample searches. These are themed searches that you can use as a stepping stone to also create your own personal search. We'll walk through that. But first, I'm I'm going to ask two quick poll questions today. We just have two quick polls to ask and help us gear the rest of the presentation. What I would like to know first is what strategies are you currently trading right now or paper trading? Are you mainly doing covered calls and naked puts? Are you looking at sort of the protective option strategies, married puts, standard collar positions? Are you doing the vertical spreads, bear call credit, bull put credit, debit spreads, or iron condors? Are you buying options, buying long calls or buying puts, speculating on a market movement, or maybe combining the two to do a long straddle or a long strangle? Or are you also looking at time spreads, what we call the calendar spreads, either the horizontal or the diagonal spreads? So just let me know what you're trading right now, and we want to make sure that we cover that. If you're trading a different strategy, go ahead and use the question pod to type in a strategy. If I didn't mention a strategy there that you're currently trading, use the question pod to send it to me what strategy you're trading that's not on the list. We'll make sure that we incorporate that as well. Okay, so this is turning out how I expected. I'm a little surprised at one of the answers. One of the answers right now has no votes on it. I'm a little surprised by that, but that's okay. All right, well, I've had the poll open for about a minute. More than 75% of you have already voted, so let's go ahead and close that poll, and I want to share the results with everyone. Let's go ahead and share that. And what we have right now is 25% of you are doing covered calls and naked puts. A smaller percentage, 13, are doing the protective option strategies. 50% of you are doing vertical spreads. No one is doing speculation, buying calls and buying puts. And then again, 13% of you are doing calendar spreads as well. All right, let me go ahead and hide that for the time being. Let me make sure the screen comes back. We're looking at the sample searches and covered calls. What I want to do now is customize our strategy view very quickly so that we can incorporate all the strategies that you selected. So I'll go to the Other Strategies tab at the top of our tab menu. This will take me to the configuration page. And we do have bull put credit, so I'm going to move that up to the top. 50% of you are doing bull put credits, bear call credits, and maybe debit spreads. We had 13% doing, 25% doing covered calls and naked puts, 13% doing married puts and collars. We had no one doing the long straddles or the long calls. So what are we going to have to add in here? Well, I'm going to have to add in collars, of course, the long collar. So I'm going to go down my list here. And we're going to select long collar from our available menu. And just add that over. We also want to add in our calendar call spreads very quickly. So we'll select that from our list and add to menu. And I might even add in some debit spread. Let's add a bull call debit for the time being. Send that in. Okay, now that we've customized this, I'm going to use the arrows here. I'm going to move bull call debit up to the top of our list as well with our credit spreads for 50% of our audience. Okay, fantastic. Let's go ahead and save that configuration. And our tab menu is now changed. We have bull put, bear call credit, bull call debit, and so forth. Okay, let's go into bull put credit. And as I mentioned, we can start off directly with the search, or we could check out some of the themed searches in the sample searches menu. I'm going to go directly to search for bull put credit. And this is the same process I'd use in any strategy. Once I go into main strategy tab, we're going to click on the search to customize our view. When you first open the search in any given strategy, you'll see a list of trades that match our default criteria that we have listed below. And the first thing that I want to impress upon everyone is that these listed trades are not recommendations or suggestions. Okay? This is based on the default criteria we created for you to use the stepping stone to create your own personal search. Once you access the search in any strategy, we'll want to scroll down below the listed trades and take a look at the parameter field. The parameter field is where we customize our settings for stock criteria and option criteria so you can identify just those positions that match your risk-reward tolerance. Now, as I mentioned, we start off here with one of our default searches. This is just called an initial value screen. So it's our default for bull put credit spreads. We're looking about 2 months out, and you want to change the values to meet your requirements. In every search, regardless of which strategy you're in, you'll see other default selections. Now, these ones here that aren't marked, test probability, conservative settings for June 19th, and so forth. These are searches that we've created during other webinars on our webinar account. But if you're just getting started, you'll simply see the 3 default screens, or maybe a few more. For bull put credit spreads, we have an initial value set, bull put number 1, and weekly bull put credit spreads. Okay, so there's slightly different settings. The first thing you're going to want to ask yourself is, what settings were used to identify the positions that appeared above in our search results? And you'll always be able to find those from one of the default searches over here on the right-hand side. This is our active filters block. And we can see here that we're looking out to November, 44 days out. We want a minimum return of 10% for our bull put credit spread. We want the range out of the money. And for credit spreads, this will relate to the short option. How far is the short option out of the money? We're forcing it to be at least 5%. We want a theoretical probability, in this case, that the stock would expire above both strike prices at 70%, and a very basic volume screen where we're just looking for options that have traded at least 1 contract today, greater than 0. For some of the technicals, we've just put in an average broker recommendation of less than 2.6. And for our stock fundamentals, we're looking for stock price above 15. We want stocks that have shown good growth. And with any spread position, we typically want to avoid stocks that have an earnings between now and expiration, because we don't want to have any surprises and get stuck with a full loss for a sudden unexpected gap one direction or the other. In addition to that, we don't have anything selected in our lists field where we can choose to screen against a specific sector or industry or exclude a specific sector, industry, or stock list as well. So that's just the basic defaults. However, we're going to want to change this to match our goals. First thing that we know here is that we're looking for an expiration time frame. We've set it to the next full month out for this default search, only 44 days out in time. If you're currently trading bull puts, you might be using a much shorter time frame. You might be incorporating weekly options, or you might be incorporating weekly and standard monthly as long as you're within a 30 or 40-day time period. Well, that's a simple setting that we'd want to change first in our options criteria. So for the various criteria you can set up in any search, you'll see the same 4 tabs up at the top. Our options criteria, where we will be able to set things such as minimum net credit, expiration time frame, percent return, probability, and more advanced criteria such as implied volatility, undervalued or overvalued ratios on the short or the long option, even things such as the bid-ask spread. If we want to limit the bid-ask spread of our particular option, we can set that as well. And then, of course, we could set our different stock technicals and stock fundamentals. Now, before I go into changing some of the criteria, I want to know what you think is the most important criteria in general when you're looking to make an options trade. What do you feel is the most important criteria when you're opening any options trade, regardless if you're doing covered calls or spreads or even married puts? Is it the fundamental or technical criteria of the underlying stock? Do you tend to focus more on implied volatility in the Greeks? Do you look at the probability above or below, depending on the position, which does relate to the Greeks? Probability relates to delta, but there's a difference. Do you look at the option with the highest premium if you're selling, or the option with the lowest premium or lowest time value if you're buying? Or are you more focused on the at-risk or risk-to-reward ratio? All right, so we have about 70% of our audience voted. Pretty interesting result here. It's bouncing around a little bit. I had the poll open for about 45 seconds. I'm going to leave it up for another 10 or 15 seconds, so if you haven't voted yet, I'm going to encourage you to do so. It's an interesting even split. But let's go ahead and close the poll now. I want to share the results with everyone. 17% of you feel that the underlying fundamentals or technicals are the most important, and 17% of you feel that the implied volatility or using the Greek analysis is important. 33% of you look at the probability. No one feels that the highest premium or lowest premium is the most important. That makes me very happy to see. So we don't have people who are doing covered calls or credit spreads trying to look for the highest net credit. which usually means you have a lower probability of success. So that's a good thing to see. And then 33% of you are more focused on the risk-reward ratio or the total at-risk amount. All right, let's factor all of that in to our search here. All right, now the first thing I mentioned I wanted to adjust. Real simple thing, we're just going to adjust the time frame. Rather than go all the way out to November with our credit spreads, let's say that we wanted to look for anything that incorporates weeklies, but still might go to close to 35 or 40 days out if it matches the rest of our criteria. When I click the drop down and the expiration time frame, I have the choice where I can screen for all months, all weeklies, or just look at the standard October expiration, November, and so forth, depending on which strategy we're doing. But normally what I do in any given search, whether it's selling credit spreads or debit spreads even, buying into debit spreads, doing standard callers or married put positions, I find it best to select all months. The all months selection is really all expirations. So it includes weeklies, what we call standard expirations, the third Friday of every month, quarterly options, it'll incorporate every expiration. And if I'm doing these credit spreads, I may want to look for a time frame where I'm at least 5 days out in time, let's say about 35 days out, 35 or 40 days out. So this will show me anything that matches the rest of my criteria, whether it's the 3-week out series or the 4-week out series or maybe even the 5-week out series, will incorporate all of that. If I did, today's Wednesday of course, if I wanted to look for options that expire this week, I would just change my time frame and go maybe 1 day to 35 or 0 days to 35 as well. I'm going to keep it 5 to 35 for the time being. We had seen on our default option criteria that we were looking for a minimum percent return of 10%. And at the same time, we were looking for a good range out of the money of at least 5%. I want to talk about these two first, because we talk about 33% of you had mentioned that the at-risk or the risk versus reward are the most important. To me, when I'm looking at a credit spread, I know I have a trading plan set up for what I allocate in my portfolio to credit spread or debit spread trading. Okay, maybe it's 15%, 20%, depending on my market outlook and how aggressive I'm being. There's two things I know. The 10% return is good, but when going for a shorter term, especially weeklies, I may want to lower that down from my original screen. Okay, I might be happy with maybe a 5 or a 7% return minimum. I'm going to start with 5%. And if I'm looking shorter term to weeklies, I'd love to be 5% out of the money, but I know I might have to go 3% out of the money to allow more trades to come in. But at the same time, I'm going to look for a probability of around 75%. Now, those are just basics. You may have other requirements. If you prefer to look for probabilities of around 80% or higher, or 85%, you just want to adjust this to match your goals. However, remember, everything works hand in hand. What I mean by that is if we were just looking 1 to 2 days out, we were looking for spreads that expire this Friday, and I wanted a 90% probability, I would have to scale down my range out of the money, because not a lot of positions are going to be 3% out of the money and have a 90% probability. Okay, they will, don't get me wrong, but at the same time, I'm not going to see a 5% return, even if I scroll my strike difference down to a point or less. We could do that. Let's keep our return at 5, range out of the money at 3, probability at 90, but let's change this to go 0 to 5 days out in time. And we're going to try to minimize our strike difference to be less than $1. Okay, so I'm going to set my strike difference to be less than or equal to $1. Many of you know with the weekly options now, a lot of those securities that offer weekly options are offering 50 cents 50 cent strike differences as well. So we can be less than or equal to 1 point. Even using this other criteria is very basic, the earnings not between now and expiration, good earnings per share growth. Let's keep that there and let's go ahead and submit the search. Okay, and we do have about 7 trades. But now here's also what I notice. Although we're using a 1-point spread or less, all of these are 1-point spreads, less than or equal to 1 point. I don't see a 50-cent spread, although we see 50-cent targets here, the 88.5, the 87.5 as well. However, look at these net credits, 8 cents, 7 cents, 6 cents. Well, what do I know about that? Well, I know that if I'm entering a dollar spread here on Celgene, where we were showing selling the Friday 112 put and buying the 111 for an 8-cent credit, we're putting up 92 cents to make 8 cents. That's a 10-to-1 risk-reward ratio. And honestly, that's what I would expect when looking for a probability of 90% or more. If I'm looking for a probability of 80% or more, I expect to have an 8-to-1 or 9-to-1 risk-reward ratio. Okay? Because if I wanted a 1-to-1 risk-reward ratio, or maybe a little bit less, a 2-to-1 risk-reward ratio, or maybe I'm collecting $1.25 against a 250 spread, well, I know that in order to get that, my probability is going to be essentially about 50%. I'm going to be right at the money with my short put, so I'd have to give up my probability requirement in the case of a credit spread if I want that lower risk-to-reward ratio, or risk-to-reward ratio, yes. Okay. But what I also know personally is that if I'm allocating maybe 10 or 15% of my portfolio, maybe even $2,000 or $3,000, depending on how many contracts I'm planning on trading, I might only be allocating with a 1-point spread, maybe $500 to do 5 contracts, for example. I don't know if this net credit is going to satisfy my needs of 8 cents. That'd be $40, and then I'm going to lose some of that to commissions. So we know here that if we wanted to scale this up and look for net credits of only 15 cents or more, we're going to have to make some other changes. Why do I say that? Nothing here that matched that 90% probability while still being out of the money has a minimum net credit of 15 cents. So everything goes hand in hand. And we want to make sure we're setting up our criteria with reasonable expectations. If there is a position out there that does have a 90% probability in the next 0 to 5 days with a minimum net credit of 15 cents, the search tool will find it. We've already seen that nothing else in our criteria here, these 5 positions, 7 positions that match our original criteria with that probability, none of them are close to that 15-cent net credit. Okay, so that's perfectly fine. I know that I want a minimum 15-cent net credit for a shorter time frame trade. I'm going to have to give up some of the probability. Let's try to go to 80. And then to keep our risk reward even, we'll still keep that dollar strike difference. We may have to open this up to $2 in order to see positions that have 15-cent net credit. But let's try it. Okay, so nothing's there. Let me open up the spread now to be less than or equal to 2. Let's go ahead and try that. Okay, some of the same stocks we saw before, Baidu and Celgene. Celgene now with the 113 put, and buying the 111, a 16-cent net credit for an 8.7% return. Now, a lot of times when a customer calls in who just started out of the trial, I get this statement from a new trial member that the search tool isn't working, it's not finding the trades. I've found trades that have my 15-cent net credit or 3% of the money and have a return of 10%. Okay, you're probably right, but they don't have a probability of 80% or higher. Okay, there's another filter in there that's causing it to stop. This tool is looking at the entire universe of options, building, for you credit spread traders, we're building roughly 1.4 to 1.5 million credit spread combinations every 15 to 20 minutes. Okay, so there's many out there. And the ones that are likely would be in the system. However, your spread is there, it just might have a probability of 78% or 75%. So it's not in that 80% probability requirement. Now to go back to our second poll, what is the most important criteria? 33% of you said the at-risk or risk-reward. For a credit spread, your monetary at risk, as we just saw, is going to be set here with the strike difference. Using a combination of the strike difference that matches your requirements and the minimum net credit is going to help you establish that risk and reward. The percent return calculation is the net credit that you're going to receive divided by the difference in strike prices minus the net credit, what we call the margin. So we can also set that up, for example, if you're looking for a lower risk to reward, you might want to look for a 15% return. But remember, everything goes hand in hand, so if I increase my return, I may have to lower my range out of the money and lower my probability expectations as well. All right, now in just the credit spread view, what are some of the other option criteria that you'll be able to use? if you screen by implied volatility, and we had 17% of you say implied volatility, and the Greeks as well, you could set the standard, just the implied volatility of the sell option, the implied volatility for the buy option, and what's also known as the implied volatility ratio. That's the implied volatility of the option you're selling. Oh, sorry, wrong one there. There we go. Divided by the one that you're buying. In general, you'd probably want an implied volatility ratio of greater than 1. You want that sell option to have a little bit more implied volatility to hope the decay works in your favor on the short option as well. And to enter that ratio in, I would just put in greater than 1. Or if I put in greater than 1.10, that means my short option has to have an IV that's 10% higher than my buy implied volatility. Okay. Other things that you can set for the Greeks, overvalued or undervalued, are down below here in the price and strike price field. Your short option delta and the long option delta. I have customers, PowerOptions customers, that took a course, a spread trading course that's out in California, and their requirement from the course is they don't look at a spread that has a short option delta of greater than 0.3. Okay, so in this case, I'd look for a short option delta for my bull puts. Got to think backwards here with the negative of negative 0.30. So I'd only want to see ones where the short option delta is negative 0.3, negative 0.2, or maybe even negative 0.1 if it matches the rest of my criteria. For a bear call credit spread, I'd look for a short option delta of less than 0.3. Okay. The delta ratio is another filter that is available. However, I feel that that's better for calendar spreads, and for debit spreads, I typically don't use this with my credit spread criteria. We already talked about the strike difference. You can set that to various ranges. Those of you who may be doing credit spreads on just the broad-based indexes, for example, the higher priced indexes or higher priced securities, maybe Priceline or things of that nature, you may have to set your strike difference to be greater than 10, okay, or maybe at 10 or equal to 10, because you know that there's 20-point spreads or 25-point spreads on those higher priced indexes. But if you don't want to put that much margin into a particular trade, you could still restrict it, but some of the higher priced indexes don't have that 5-point spread difference as well. Okay, and then of course, important as well is liquidity. I didn't have that as one of my selections there, but it would fall under some other things. So if you want to see active options, you can screen by the option volume today. The previous option volume, total number of contracts traded yesterday. The open interest, of course, the number of open contracts for that particular option, and the percent current option volume. This is maybe used if you're looking for some activity, some increased activity on your securities. And what this is showing us is today's total option volume for all strikes on a given stock across all months expiration compared to its 30-day average. So if I wanted to look for options today that are trending, maybe showing more activity, I could use a percent option volume field of greater than 200, greater than 150% or so to see the ones today that are more active on the field. Okay. Leo asks, are the criteria in your sample searches all based on what? Well, the sample searches are themed searches. Let me go ahead and let's see here, open up another window. So I'll navigate over to the sample searches on that one so we don't lose what we're working on here, Leo, with our, I apologize, bull put credit spread screen. Okay, sorry folks. There we go. Let me get into the screen here. All right, and there we go. So let's go back to bull put now once more, and I'm going to go into the sample searches. The sample searches, Leo, in every strategy are themed searches. So we have one here set up looking for just bull call. I'm sorry, I clicked on bull call debit. Let me go back to bull put. Sorry about that. Similar ones. There's one here that's just looking at bull put credit spreads on ETFs. And it tells you here what we're kind of using. We're set up a search to screen against ETFs, 10 to 45 days to expiration, minimum 4% return, have to be in an uptrend, and we're sorted by the highest probability of expiring worthless. The 5-star bull put search, well, it's bull put credit spread, so we're probably going to want bullish stocks. And in this case, we're looking at only those stocks that are in the list. One of the tabs that we can do, we've selected specifically to look for bull put credit spreads on stocks that are in the S&P 5-star list, those rated a 5-star buy by Standard & Poor's, and again, at least 4% out of the money but now sorted by the highest return instead of the highest probability. And then there's a bull put search for large cap stocks. So it's similar criteria, but it's looking at a specific, one for ETFs that are in an uptrend, one for stocks that are rated 5-star buy by Standard & Poor's, and then the large cap ones as well. You can use those as a stepping stone to create your own personal search going forward. So we've put in the criteria of various themes that investors have asked us over time. Do you have a bull put credit spread for ETF? Do you have a bull put credit spread for high-rated stocks? Yes, they're in the sample searches. And if I go ETF bull put search, once again, we see the listed trades. These are not recommendations or suggestions. The first thing you might see is that, again, as we saw with the initial value, all of the results are in that standard November expiration that's 44 days out in time. So whenever you pull up a sample search or search and you see the results here, you don't want to take the first one as a recommendation and go ahead and trade it. You want to scroll down below the listed trades. Take a look at the criteria that we're using. Well, we are going 10 to 45 days out in time, of course sorting by the highest probability. And then we have some other criteria here. We don't want to see a lot of implied volatility, minimum net credit, that maximum risk. That's another thing I was going to get to as we were talking about the strike differences as well. And looking for a probability of 75%. Stock is in an uptrend. But here's something I'm going to cover in just a little bit. Notice down at the bottom of our active filters in our lists tab, we chose to include indexes and ETFs, so we told the system just to screen against indexes and ETFs, but we removed the leveraged ETFs, the 2 times and 3 times bull and bear ETFs from our list. There's another one that I might want to remove as well, and I'm going to walk through that in just a few moments. Okay, and you see the standard ones you'd expect: GLD, Treasury ETF here, DIA, FXI, one of the China ETFs as well. Okay, so that's just a review of sort of what the sample searches are and how you want to use them. Going back to our our bull put credit spread screen here, we talked about the strike difference to help you select what strike difference you wanted to use. Another field we can use is the maximum risk. Maximum risk here in the credit spread field is the strict monetary risk. So I know if I'm in a 2-point spread, but I'm collecting 25 cents, my maximum risk would be $1.75. So if that's part of my limitation, I could set my maximum risk to be less than $1.75. And essentially on 2-point spreads or less, that would mean I'm taking in at least 25 cents there. But of course, anything that's lower than that, receiving a higher net credit, maybe only having a risk of $1.60 or $1.50, would also still match my search criteria. Okay, so we covered the probability. Again, if you're looking for more liquidity on your positions, you might want to put in an option volume today of at least 50 contracts, and then maybe an open interest of at least 100. I know many investors I talk to, PowerOptions subscribers I should say I talk to, have higher restrictions. They'll look for at least maybe 200 contracts traded today and open interest of at least 1,000. But it's all personal preference and also depends what time frame you're looking for. Okay, so we've talked about the option criteria for credit spreads. We're going to get to everyone else too, those of you that, of course, were looking at covered calls and naked puts and even the protective option strategies. But before we do that, let's go into our fundamentals and technicals as well. So to start off, we go into the fundamentals. We didn't see a lot originally selective in our active filters for this default search, but we want some room here for the stock to move. We don't want lower price stocks. We put in a stock price of greater than 15. If you're trading credit spreads, bull puts or bear calls, and you typically want to look for larger price stocks, no problem. Just make your change. I only want to look for stocks greater than $50 per share for my weekly bull puts. Okay. For this bullish strategy, which is also covered calls and naked puts, married puts as well, even some of the calendar call spreads if you're using those. Some of the criteria that I prefer to use is to look for an earnings per share growth of greater than 5%. I want to see some growth in the stock. I don't want to use negative earnings on a position that I'm doing a bullish strategy. I may use negative earnings on a stock I'm going bearish on just to reflect weakness. And in general, I like to use a PE range, maybe 0 to 70 or 0 to 50. What are some of the other things we can select today? Well, market cap. If you wanted to look for mid to large cap stock, it gives you a guide here that we'd maybe look for greater than 2,000 in the field as it's measured in millions. Or if we're doing bear call spreads and we trade bear call spreads on small cap stocks, we might look for that range to be less than 2,000 in the bear call spreads. Price to book, price to sales, dividend stocks. We're going to talk about that when we get to covered calls and married puts, okay? And again, two things that you can avoid in the fundamentals field. Earnings date, not between now and expiration, something I always select with my credit spreads. If you're doing covered calls, for example, on dividend-paying stocks, but you don't want to have the call open prior to the ex-dividend date, you can make sure to select the ex-dividend date also, not between now and expiration. So those are just some of the basic things I might look for any bullish strategy. Stocks that have reflected good earnings, have a relative PE ratio, and maybe mid to large cap stocks depending on my preference. Now the technicals is where we can get a little bit more in depth on what we'd want to see. We just had a basic technical indicator here, the average broker recommendation of less than 2.6. This is based on the ZAC scale where 1 is your strong buy, 2 is a buy, 3 is a hold, 4 is a sell, 5 is a strong sell. So by looking for less than 2.6%, we're only looking for positions that are between a strong buy, a buy, or between a buy and a hold recommendation. There's a variety of other things that we can use. The most basic is the simple moving average. And when I'm doing a bull put credit spread, either if I'm doing a shorter time frame or even a longer time frame, I'm probably going to want to look for a position where the current stock price is greater than the SMA 20 or the SMA 50. You could, of course, also look for stocks where the 20-day moving average is greater than the 50-day, where the 50-day is greater than 100, and so forth. Okay, so you can make different selections there as well. So I'm just going to go, since we did a weekly screen here with that 0 to 5 days out in time, I'm only going to want to see stocks that are trading above their SMA 20. If you use MACD, you can use the MACD cross signal here. So if you only wanted to look for stocks where the MACD line is above the signal line by a certain number of days, I could set this to be greater than 1. So I just want to see positions where they've crossed over by at least 1 day. If I'm looking for a recent MACD crossover, I may just put in a field where I want to see the MACD over the signal line by less than 2 days. Okay, we'll get into that. I'm going to get into MACD and Bollinger Bands towards the end of the presentation, just a brief review there as some of the other indicators. Okay, now, other factors we might want to use in the technicals. You might not want to use broker recommendation. That's perfectly fine. You can screen for the stock volatility. In addition to the implied volatility of the options, we can limit the volatility if we want it to be less than 0.7 or less than 0.6. If you use beta, you know, how much does your underlying stock fluctuate in relation to the S&P 500? It's another filter you can use. Where is the stock now in relation to its percent of 52-week range? If you're doing a specific search where you want to look for stocks that are trading in a downtrend and at the bottom of their 52-week range, maybe hitting new lows, we could set a percent of 52-week range of maybe less than 5%, blank to 5%. If we're looking for stocks that are up near the top of their 52-week range, then as here we could put in a range of greater than 95 percentile. In addition to that percent option volume we talked about, to look for stocks that are more active, we can see the percent stock volume as well, to see stocks whose volume today is greater than the average of the last 90 days. I feel something I use more importantly for my selections for married puts, for collars and things of that nature is the average stock volume. And I just want to see, I prefer to look for stocks in addition to having that good earnings per share growth and maybe relative PE ratio, I want to see stocks that have at least 750,000 shares on average per day traded over the last 90-day average. Okay, and then of course RSI. Those of you who are using RSI, some of you might look for stocks that are trading above the 80% RSI or 80 RSI that have been trending upwards. You might think they're going to reverse, or below 30. Ones that have been falling, and we see an RSI below 30, you might use that as an indicator the stock's going to reverse and start going up, which might be good for bull put credit spread as well. All right, so those are just some of the basics. I don't think we're going to see anything now that I've made a couple of those changes. Yeah, none of them match our criteria when we made the adjustments. Probably not to the volume or open interest, but more likely probably with the uptrend, I guess, although we've seen a good uptrend the past 3 or 4 days. Okay. Now, let's talk about a basic search from scratch. We talked about using the default search as a stepping stone, and we talked about using the sample searches as a stepping stone as well. If you have a very specific search requirement, you think to yourself, my trading plan is, I only want to trade, let's just stay with bull puts for the time being, I only want to stay with bull put credit spreads that are less than 5 days out in time. I want to look for this week, but I just want to look at standard ETFs, and I want a minimum 10-cent net credit, probability of at least 75. Okay? Well, that's a very specific search. It's very easy to set up with a couple of tricks. Let's go ahead and walk through that. I'm going to clear the filters. We're going to empty everything out. We know some of our basic stock criteria, or I should say ETF criteria we wanted to use, and we know some basic option criteria. We want a time frame again, all months, 0 to 5 days. We're just looking this week. We have a minimum net credit requirement of 10 cents, and we want a probability of at least 75%. Before I set anything for the maximum risk, the strike difference range, or even the return, I'm just going to focus on my net credit and my probability. One other thing I'm probably going to do is add in liquidity at this time. I want to look for option volume, let's say at least 25 contracts today and an open interest of at least 50. Will not be a problem if we're looking at the broad-based indexes and ETFs. Now, we're not going to worry about any technicals or fundamentals yet. We are going to go into the lists field first. And what do I want to screen by? I want to look at indexes and ETFs. So we can go into the stock lists field. We're going to include the drop down here. I just want to include indexes and ETFs. Now, I'm bullish on the position, okay? So what do I know? Well, if I want to stick with the standard broad-based ETFs and indexes, I'm going to have to remove the leveraged ETFs, the 2 times and 3 times bull and bears. I'm also going to want to remove the inverse ETFs, okay? I don't want a bear ETF that's going to go down if my expectation is the market's going to go up. Now, I can choose to exclude, oh, sorry, folks. I can choose to exclude the inverse ETFs or the leveraged ETFs as well. But this only allows me to do one or the other. Okay, but I want to exclude both. I want to exclude the 2 and 3 times, excuse me, and I want to exclude the inverse. So what I can do now is combine a list. I'm going to click on Create and Modify Stock Lists, and this will take us to a field where we can select to create a new list. So if you do just have a list of 30 or 40 stocks that you want to screen against in a given strategy, you would just go to Create List, name your list, and paste in the symbols, excuse me, and that will be available for you in the list. What I want to do is combine 2 of the existing lists. So I'd call this list ETFs to remove, and then I would just select from the available list inverse ETFs and leveraged ETFs. Then we just go ahead and click on Create. I'm going to cancel this for the time being, simply because I've already done that. Webinar a little while ago, a couple months ago, we did the ETFs to remove from the standard search. It is a combination of the inverse and leveraged ETFs. Oops, sorry there. So once again, back to the lists. Let us include, oh shoot, I apologize, ladies and gentlemen. Let me go ahead and clear that out. It wasn't supposed to reload the page for me. Let me just reset this very quickly. 0 to 5, 10-cent net credit, and just the probability of 75, and option volume today greater than 25, open interest of greater than 50. I'm going to go back to my lists. I just want to look at indexes and ETFs, and then I'm going to exclude that created list, ETFs to remove. Let's go ahead and run that search and see what we get. All right, so XOP, SPY, QQQ, things that we would expect, IBB, and more. The technology. Oh, I also have an index here. Might be okay, but if I was just looking at standard ETFs, I want to filter this out. So little trick but there's an easy way to filter out the indexes. If you're looking at this indexed ETF list, what we can do is just go straight into the technicals. I'm going to put in an average stock volume of greater than 0. Okay, because remember, ETFs will have volume, indexes won't. So if I put in an average stock volume of greater than 0, we've taken this down to 87 results. We got rid of all the indexes. Now, a couple things I want to note here. When I run a search from scratch, whether it's very specific or it's very limited, I usually want my results to be under 40. I really want about maybe only 2 dozen or 3 dozen results here in my field. Okay, so we have 87 total results listed on this position. I want to narrow that down. What are some of the things we could do? Well, now we could go back to the technicals, and I could say again that I only wanted positions where the stock current price is above its 20-day moving average. Okay, so let's go ahead and submit that. We took that down to 55. It's a good combination. What is the next step I might use? Well, if I'm comfortable with a 10-cent net credit, and I see various positions here with 19, 20, 25, and so forth, I may want to narrow this down. If I'm comfortable with a 10-cent net credit, probably going to be just as comfortable with limiting it to 15 cents or more for the net credit. Let's go ahead and submit that. And we've taken it down to 30 results. Now, I didn't put anything in restriction for the strike difference range or the maximum risk, but most of my positions are probably where I want. You see here the first one on XOP is a 37.5, 36.5. It's a 1-point spread. The next one on SPY is a 1-point spread, as is QQQ. This is 1.5, so I'm well within the range of what I'd want to see for my risk range. I'm not seeing 5-point spreads or 20-point spreads on these ETFs. This is where I want to be, around that 1 or 2 range. Okay, so that's a very simple, a couple little tricks, but a very simple way if you just want to look at bull put or bear call credit spreads on the ETFs. Set your time frame for the shorter term, or we could even go longer, but set your desired time frame. Put in those important criteria for your options. What is your probability, your minimum net credit, and then of course you could use the list for indexes and ETFs. If you're doing stocks, you could choose just to screen against the S&P 5-star list, the IBD 50 and CanSlim, or some of the other preset lists. And again, if you have your own list of stocks, you can create that and just go against it. Okay, sorry, I had a question come in from Raza. Using technical filters, how many additional indicators are available? Well, everything that we have, Raza, was available in this view. What you see here, the format that you're seeing here for the technicals, fundamentals, and lists are the same exact criteria and the same exact listing you'll see in any strategy. So in the stock technicals, the beta, percent of 52-week range, percent stock volume, and average stock volume, historical volatility of the stock, average broker recommendation, RSI, days to short interest. The Bollinger Band and the Bollinger Band ranges, the simple moving average to look for a stock trading above or below those as well. If you want to get more advanced on the moving average, you could select to view the days that the stock has crossed the SMA 20. Or you're looking for a longer upturn trend, I might look for stocks that have been at least 5 days above the SMA 20 or the SMA 50. Number of days stock up and down, the historical trend, if you're looking for more of a pronounced up and down as well. And then, of course, the days of the MACD, days cross the MACD signal over or under. You know, if I'm in a bearish, looking at bear calls, excuse me, Raza, I may switch this to be under, so I want the MACD to be under the cross signal by at least maybe 1 day or 2 days as well. All right, a second question that just came in, I believe it's from James. James, yes, I only trade 4 ETFs. Can I set up the list for these 4? Absolutely. James, you'd go into lists. We would go into create and modify stock lists. That just gives me the choice up at the top here to combine an existing list or create a new list. Okay, you see here I've created one with my indexes. I have a my index list and it's only 4. It's NDX, SPY, RUT, and I forgot the 4th one. Believe it or not, DJX, of course. So I've set up with those 4. Well, let's just say you're using the 4 main ETFs here and you just want to screen against those. So we click on create list. We'll just have to put in a list name. We'll call it my 4 ETFs. List description. You don't have to put this in, but we can. we'll call it the, oh, I'm sorry folks, the only 4 ETFs I trade spreads on. And then I can paste the symbols or type them in. So it's probably, well, you have your own, of course, but I might put in SPY, QQQ, IWM for the Russell 2000, and DIA for the Dow. Just create those 4, click on Create. Okay, so now my new list has been created. This is my 4 ETFs. Right? Now, once I've created the list, all I have to do, James, is close the window. It's going to refresh the page again. And of course, we could just set up our filters the way we want. Go into lists. Now I'm going to remove no lists, and I'm just going to include my 4 ETFs. And there we go. So we've got 25 results. They're just SPY, QQQ, and IWM, and there's 1 or 2 DIAs in that list as well. Okay, so that's what we want to look for there with that list. I do have a full webinar on creating the lists and using the lists also. So let's move away from that, and let's jump on over to covered calls. All right, I'm going to go into the sample searches. As we discussed before, there's a variety of different sample searches here for the covered call menu that you can use as a stepping stone. The 7-Eleven report is more aggressive. It's looking for a very high % return if assigned with a very high downside protection. Again, this is not a recommendation or suggestion, but if you like to take more risk by looking for more volatile covered calls, that's what the 7-Eleven report is. More conservative, the broker and advisor recommended. It's just looking for covered calls that have to be part of the S&P 5-star and have good broker recommendation. Covered calls on ETFs, covered calls with dividend stocks and out-of-the-money calls or in-the-money calls. 5-star, low PE, that large cap one, again, because it's a bullish one, large cap over 10 billion, safety first report. And then for those of you that might look for lower price stocks, lower price covered calls, you're buying a stock, you have the 25 report, under 10 report, and under 15 with safety. These, again, are all criteria that you can use as a stepping stone to create your own personal search. But if you have a specific search, for example, let's say that you want to find covered calls on stocks trading in an uptrend, and you want a minimum return. Let's say you're going about 14 days out, so the 2 weeks out covered calls, and you want a minimum return if assigned of 2.5% and a time value of at least 1%. That's easy to do. Let's go into the search, and you could scroll down below the list of trades, and you could start off, for example, with the default weekly covered call screen and make your adjustments as necessary. I'm going to do the same thing we did before. I'm going to clear out the filters, and let's put in our fundamentals first. Now, because we're buying a stock here, as we would with a married put or a standard collar, or if we're doing cash secured puts, we have to put up the entire margin. Based on your account size, you might have a stock price restriction at this point. Okay? So you might only be looking for stocks between $5 and maybe $150 per share, or $175, or maybe even just $5 to $75 per share, depending on your account size and how much cash you're allocating into new positions. But to limit down the universe, you want to put in your specific stock requirements. I'm going to put mine at 95. That's not to say that there aren't good stocks that are trading in the 100, 120, 150 or higher range. It's just that my account size dictates I should be under $95 per share for my covered calls. What are the other things I wanted to talk about? Well, remember we talked about the neutral to bullish positions. I'm probably going to look for stocks that have reflected good earnings. And that PE ratio, it's just a personal quirk. Okay. And then the market cap, remember we saw here that if I wanted to look for mid-cap stocks or larger, you need to use a value of 2,000. So I'm going to go ahead and plug that in. With a covered call, naked put, or credit spread, I'm probably going to want to avoid earnings between now and expiration. For some of the other strategies, such as long straddles, long strangles, maybe even buying calls and buying puts, you could look for positions that do have earnings between now and, let's say, 2 weeks from now or 1 week from now as well. And depending on your position, meaning if I'm doing a covered call on large cap stocks, mid to large cap stocks, of course, that pay a dividend, but I want to avoid early assignment on the ex-dividend date, I could choose to select not between now and expiration, but I'm not going to worry about that right now. Let's move into the technicals. This is just our basic stock requirements. We want to see some growth, mid to large cap, not between now and expiration. and I have to have my price range in. For the technicals, what else do I want to see? Well, I'm probably going to want to look for something that has a good average stock volume. Again, this was measured in thousands. You can always hit the pop-up window here. So I only want stocks that trade at least 750,000 shares per day. And for right now, I'm just going to look at the basics. We're going to look at a stock again, trading above, I'm going to try the 20-day moving average because I'm going to look about 9 to 14 days out in time for my 2-week out options. That's all I'm going to set right now. Now let's go into the options. And what did we know? Well, first, my desired time frame. Let's go ahead and put this at about 8 to 15 days out in time. Okay, open it up to about a 2-week range. My percent of funds changed, or the time value. So I can put in a percent time value of at least 1%, and my percent of fund change of at least 1%. Notice how everything looks exactly the same as we saw in the bull put, except for the options field. And that's because there's different criteria that we use. We still have our implied volatility. We can look at overvalued or undervalued. The implied volatility over historical volatility, or what's known as the SIV. It's the average volatility of all the options around it for the near-term months. The percent implied volatility range can also be a useful filter for those of you doing the single option strategies, such as covered calls, buying puts, naked puts, even naked calls if you're doing that, collar spreads, I think, and even married puts. What this is showing us is where is the implied volatility now compared to where it has been over the life of the option. So if I'm selling premium, I want to look for options today that are in the higher range of their implied volatility range, because I'm hoping for a little bit of a implied volatility fall or collapse so that my option will decrease in price after I've sold it. I might put in a percent implied volatility range of greater than 70 or greater than 80%. If I'm buying, probably looking for a percent implied volatility range maybe less than 30% or somewhere along those lines. But we're going to keep it simple. That's what's available in the single option strategy. We're going to keep it simple and just go back to what we were looking for. We talked about that percent if unchanged of at least 1%, and my max return if I'm assigned of at least 2%. Downside protection for you covered call traders is simply the option premium divided by the stock price. It's reflecting how much you're collecting against the underlying stock as a percentage. Another way to look at that is how far percentage-wise can the stock fall from its current price before you start losing money on the covered call transaction. For those of you doing naked puts, the downside protection is kind of referred to as the percent to break even. All right, but maybe I want at least a 3% downside protection. Now for right now, for our covered call screen, I'm not going to put in anything for the in the money or out of the money range, specifying that I don't want to be more than 2 strikes in the money or 2 strikes out of the money. But I can guarantee you that every option that's going to come up when we run this search is probably going to be within 1 or 2 strikes, either slightly in the money or slightly out of the money. Okay, so I don't need to use that field right now. Okay, minimum option premium. If you had a minimum requirement, just like we saw the net credit and bull puts, you could put that in. Okay, I'm going to focus just on the return and the percent of fund change. But since we are using weeklies, let me change my mind here. Minimum of 15 or maybe 20 cents. Again, as I mentioned, we could filter by bid-ask spread if I want to keep the bid-ask spread small to maybe less than 5 cents or 10 cents. You can also use a percentage bid-ask spread. What's the percentage? Well, if I've got a dollar strike, if I have a dollar bid-ask spread, for example, if my option premium is $1, I apologize, and the bid is $1 and the ask is 5 cents, well, it's a 5-cent bid-ask spread over $1, so it would be roughly a 5% bid-ask spread. Okay, so it's the percentage of the spread divided by the underlying cost of the option. Black-Scholes ratios. This is another way to screen for overvalued or undervalued options using the 50-day volatility or the average implied volatility, the SIV, Black-Scholes ratio of SIV. If you wanted to look for overvalued options, we could look for a Black-Scholes ratio of greater than 1. If you're buying, you might want to look for a Black-Scholes ratio of less than 1 as well. And again, we have our open interest, option volume, our liquidity, and again, the percent current option volume if you want to look for options that have shown higher activity across the board on your underlying stock. Option volume today, let's keep our same range, 25 contracts and a 50 open interest as well. Now, I'm not going to worry about probability either because I'm more focused on my return and my downside protection. We've put in our requirements for the stock. Let's go ahead and run our search. Let me clear off that circle there for us. All right, 22 total results. We try to avoid stocks that had earnings. I know Micron already had theirs a couple days ago. I don't know about Marvel Tech. Win Resorts, I don't know when they're reporting. I just know Micron because I was tracking that one as a potential married put trade for radioactive trading. But we've narrowed this down to a nice number of only 22 results. Now there are duplicates here of Win Resorts. All right, they have some inflated premium right now. And as I mentioned, of course, all of these are 9 days out in time based on our time frame. These results are sorting by percent if unchanged. But you can filter the results any way you want. Any filter that you can use in a given strategy, you can change the search results. So let's go ahead and change this. Oh, I think I just missed it. I want to change this because I want it to be sorted by the highest probability of being assigned to lowest. All right, so I'm just going to change that to percent probability assigned. Let's go ahead and submit it. All right, so Win Resorts, the top one, is a deep in the money 68 call, which is offering a 2.8% return if assigned, if the stock stays above 68, and a probability assigned of 68.4%. High implied volatility, though. Something's going on. They might have just had earnings. Earnings may be coming out today, or came out yesterday. Let's take a look here. Anytime I have a question, I'll go to Research, and I'll go to Stock Research. All right, so it's unconfirmed at 10:27. Okay, unconfirmed means that we have a date that's listed from our data source, but it hasn't been confirmed yet. So I might want to do some other research here and see, maybe from the company information, take a look at the news, if there's any information about earnings coming out. Mining stocks in the top 3, so on and so forth. Okay. Yeah, so we'd have to look a little bit more to make sure that the earnings aren't coming up between now and our 16th of October expiration. I think they're going to be coming out after that, but there's just some implied volatility increase here on Win Resorts as well. So I'd like to dig further and see why. But this is the highest probability of getting assigned and earning that 2.8%. However, we wanted a higher percent return. You could change that also and just filter by the highest percent return if assigned. So again, the stock technicals, the stock fundamentals are going to be the same pretty much for every strategy. All that's going to change is some of the definitions for the returns. In a covered call, we focus on the percent if unchanged, the percent if assigned, and the downside protection. Of course, the percent if unchanged on a covered call return for an in-the-money covered call is the same as the percent if assigned, okay, because you'd still be assigned to make the max return. For an out-of-the-money covered call, the percent if unchanged is going to be different because the percent if assigned factors in the increase in intrinsic value as the stock moves above your short call. The percent if unchanged is not taking that into account. But this was a good, reasonable search that has the criteria that I would usually look for perhaps in a covered call position. Now, I'm saying that based on the concept that 25% of our audience wanted to look at covered calls or trading covered calls. Many of you know I don't do covered calls anymore in my account. I haven't for a good 6 or 7 years. If I see something such as Win Resorts that has a decent premium for a short-term trade, I'm more likely to open this as a standard collar, where I might buy the stock at 71.55 and I might sell the 72 or 73 call and at the same time maybe buy a 68 or a 67 strike put. So if the stock goes against me, I have a limited loss for the next 9 days, but if it moves up, I'll still be able to make 1.5 or 2% yield for this 9-day trade. Not as high as the 4% or 4.6% on some of those out-of-the-money Win Resort calls, but that's okay because I've got the downside protection locked in better than a stop order by using the standard collar as well. All right. Many of you know we had 13% of our audience say they're doing married puts and collars. It's 1:04 p.m. Eastern Time. I'm going to stay on for a little bit extra. If anyone has a specific question about any of the criteria we've discussed in the searches or for a given strategy, go ahead and send that to me. We'll make sure we address it before we close up today as well. For those of you doing married puts and collars, of course, maybe following the radioactive trades, this default criteria here, the radioactive sorted by highest earnings per share growth, this is the same criteria that I use when I'm opening my radioactive trades, and the ones that I open in Fusion that the Fusion subscribers can follow always come from this list. All right, I want the put to be 150 days out in time or more. I'm going to keep my risk within a limited range, and I'm going to look for stocks that match the other criteria. But I will make some subtle changes. Okay, so when I go into married puts to do a radioactive trade, the first thing I usually adjust is the maximum risk field. Personal preference, buying a stock and buying a put, if I'm paying the money for the insurance, I typically don't want to take a risk of greater than 7.5%. The open interest greater than 0, that's okay as well. Again, in the technicals, default criteria that we discussed in the blueprint is a minimum average stock volume of 300,000 shares. I'm going to up that to 750. Historical volatility, I want to see some activity in the stock, and yes, I want to see a stock in an uptrend. The fundamentals, what would I change here? Again, because I'm buying stock, I know my account size. I'm going to change that default stock price of 9 to 200, and I'm going to go 5 again to 95. And I'm also going to throw in those other two things I mentioned. I like to look for a good earnings per share growth, maybe a PE of 0 to 70 or 0 to 50. And at this point, there's a trick here for those of you doing the radioactive trades. If you wanted to open the married put with a dividend paying stock, we could just put in a minimum percent dividend yield of maybe 1.5 or 2%. But I'm not going to have a lot of results by doing this. Okay, so what am I setting up here? I set up a married put where I want to buy the stock, buy the put at least 150 days. I want my risk to be less than 7.5%. I don't want to go more than 20% in the money because I'm going to hedge myself too far if I go 40, 50% in the money. We talked about the average stock volume, stock in an uptrend, the historical volatilities here. But now, since I added the dividend into this list, if I submit the search, I'm going to expect one result. Or okay, Texas Instruments is a good one I've been thinking about. DFS, I haven't analyzed them, Discover Financial Services and Cisco Systems. Why is there such a limited number of results? There's two reasons. Number one, we prefer to look for stocks when opening a married put in the IBD 50 and canceling list. There's nothing wrong with that, but it doesn't have to be limited to just that list. You could open that up a little bit more and just select no lists. But the combination of IBD 50 and canceling stocks with looking for a dividend of greater than 2% or so, not a lot of IBD stocks pay a dividend. In addition to that, larger cap stocks, I didn't put that in, but mid to large cap stocks that pay a higher dividend, say around 3% or so, are probably not going to have a volatility of around 25%. Again, things go hand in hand, not only in our option screening for what we want to see for risk versus range in or out of the money, or percent return and probability that we saw with the bull put or the covered call. But in this case, the fundamentals go hand in hand as well. So if I look for a stock that pays a 4% dividend and the IBD 50 and canceling list and still has a volatility of greater than 25%, I don't think I'm going to get anything. Okay, so how would I switch that? If this dividend was still my requirement, I'm going to have to take out the volatility. Let's just go to 0.10. Okay, so I'm going to have less movement, and we get Altria Group. And the reason why this is only one result is, again, because we've limited it to the IBD 50 and canceling. I'd probably want to go into our stock list field here and maybe select no lists, or maybe the S&P 100 or the S&P 5 stars. Let's change the list here. It's still a bullish list, and this is a bullish strategy. So we get two car companies, General Motors and Ford. At least it wasn't Volkswagen, but that's okay. I drive a Volkswagen, so I just kind of laugh. But it's not a diesel, so I'm not in that lump with everyone else there. Okay, but that's just kind of the way that you can adjust the criteria based on what you want to see. And again, that's still a restrictive list, so what if we just went no lists? We told the system we just want to see stocks in an uptrend. We have to have our average stock volume, good growth, and so forth. So we're just opening up the entire universe of stocks now. We have 23 results. Chevron Texaco wasn't in the S&P 5-star list and was not an IBD. Neither was Kinder Morgan. Altria we saw that was in the IBD. Some of the REITs here got well, for this strategy, be careful with those. They pay too high of a dividend because you're not going to see any activity. It's going to be much harder to manage over time. Okay, so that's just a discussion there. Last but not least, I'm going to breeze quickly over into calendar calls. That was discussed as well. I've created the searches here for the calendar calls. This is something I used to trade. The initial values, this is a lot more option criteria intensive because we're dealing with two options that have different time frames. But notice something that isn't that different. Look at our active filters for the stock technicals. This is the calendar call, and it's a diagonal, where I'm buying a slightly in-the-money call, maybe 4, 5, 6 months out, and selling the at or out-of-the-money call against it. We've set that broker recommendation to maybe less than 3, less than 2.6. Stock price greater than 10. Oh, but look, because it's a bullish strategy, earnings per share growth greater than 5%, PE of 0 to 70, not using any lists, but that's my only stock requirements. Where it gets intensive now, because this is a more advanced strategy, is the differences, okay? The difference in the ratios. So instead of just screening for the time value or percent time value of the option, you can screen by the long and short time value and the time value ratio. Just as we saw with the bull put credit spread, I can screen by the implied volatility and also the implied volatility ratio, as well as the sell implied volatility range and the buy implied volatility range. Net credit reflected as a negative, all right? So when I'm looking at debit spreads, if I was at bull call, debit spreads would have seen the same aspect. I want to think reverse because it's looking at a net credit field. So the total debit I'd pay in this position greater than negative 15, which means I'm only going to see debits that are less than $15. I'll probably change that to tell you the truth. Let's take that out. There we go. Oh, sorry. Fantastic. I want my debit to be less than $9, so under 10 points. But I still want the downside protection and the max return. Out of the money for the, I set a default here for the out of the money for the near call, just so the call that we're selling, whether it's a weekly or whether it's a short term, just looking at 0% or more, so it has to be at or slightly out of the money. And I want to be at least 5% maybe in the money for the diagonal spread. And a new trick here that comes into play is, we saw it in the credit spread, is the long option delta, short option delta, and the delta ratio. I typically set my delta ratio at around greater than 1.8. And this is the delta ratio here is the delta of the long option divided by the delta of the short option. In the calendar spread, sitting at greater than 2% means that if the stock moves up 1 point, my long option delta should gain twice as much as I'd lose on my short option delta increase in value, in the monetary value, okay? That's what it's looking for. And then, of course, your liquidity. And it's a good search, but way out of bounds, folks, isn't it? It's 500 total results. But notice the time frame. I want to set the time frame here to be more restrictive. This is just looking again at that standard November series for the initial value calendar spread, and it's looking at all leaps, everything that's maybe at least 220, I believe, or 250 days out in time. But I'm going to change this to match my needs. I'm going to select all months for my near term or the short option expiration, and let's go maybe 5 as we did before to 25 days out in time. And for my long option, maybe I want to go maybe 2 months out or 3 months out. So we're going to go a minimum of 60, but no more than, let's say, 6 months out, 60 to 180. I've got my debit set the way I want, my return of at least 4%, my downside protections there are good. Got the range that I want, but I probably don't want to be more than 5% out of the money. So I don't want to collect 10 or 15 cents for that premium. Well, the option bid's at least 15. Let's jump that up. Let's go 35. Anyway, you'd put in what you want to see, run that search. We changed our time frame, narrowed it down a little bit, but I'm going to have to restrict this even more. I probably would go shorter term. Let's just go to 120 days out. This will knock off maybe half of the list. No, not that many. Only put us at 43. Okay. So, essentially, that's what we want to look at when we're doing the search. I just want to show the calendar spreads a little bit because it does get more complex. Same concepts that we'd apply to any other strategy. It's just now we can apply it to the short and the long option for time value percentage, delta ratio, implied volatility, and more. All right. Well, let's go ahead now, and I'm going to navigate back over to our slide menu. Once again, I'm going to prompt everyone, encourage everyone, if you have any questions, go ahead and send those in right now. Some of the basic review, the basic tips we talked about. Use the search. When you go into a search in a given strategy, you can go right into the search and use those default criteria. Those criteria are set up to help you get started. And Ernie and I have set up those searches based on what we would look for if we were going to open a covered call today, a naked put, whether it's a standard expiration looking 30 or 40 days out in time, or whether it's a weekly series. But you're going to have a different risk-reward threshold. You're going to have different criteria you want to incorporate. So you can use those sample searches or the ones in the default search as a stepping stone. You adjust your criteria after you originally have that search. One good tip is adjust one criteria at a time and submit it. Let's say we open that default covered call search, the initial values, and we had 80 results. And I go in and I put in that I want a minimum dividend of 3%. I want a volatility of greater, historical stock volatility of greater than 0.5. I increase my return to be a 4% if assigned and a 2% if unchanged. And I throw in something else such as an RSI of less than 30. I submit it, and now I see that message we saw that there's no results that match my criteria. Well, which one restricted it the most? Was it that dividend? Was it the RSI? Was it the range out of the money? Which one restricted it the most? So it's best when starting with one of the sample searches to put in one criteria at a time, submit it after you make the adjustment, see how it lowers the number, and then put in your next criteria and submit it, and then your next criteria. Okay? There's a lot of criteria in every strategy, I understand that, but don't feel overwhelmed. If you're creating your own personal search, go into the search, scroll down below the list of trades, hit the clear filters button, and then start from scratch. Put in the 5 or 6 criteria that mean the most to you in a given strategy. We talked about that earlier. For the bull put, expiration time frame, minimum return requirement, your probability, might want some option liquidity, but now I'm doing a bull put spread, so I'm going to want to see stocks that are maybe trading in an uptrend and maybe stocks that have shown good growth and have good average volume. That's 7 criteria right there that can get me a good starting point. So I'd put those 7 in first and submit it. I get results of 44 back. Maybe I continue to increase my probability or increase my net credit at that time, but just do it one at a time. Never, ever feel pressured to use every available criteria. Okay, if I put something into every filter there that's available in the stock technicals, fundamentals, and the options criteria, I'd never get any results. Okay, because things work hand in hand. We saw that in the video. Okay, if I look for too high of a probability with the expectation of a 5 or 6 or 7% return, I'm not going to get any results. They go hand in hand. If I'm looking for a stock that pays a very high dividend, let's say greater than 5%, but I also want the volatility of the stock to be around 50%, that's not going to happen. Okay, stocks that pay that higher dividend aren't going to be there. So everything kind of works hand in hand together. All right. We kind of just reviewed this. Input the settings that apply to you after you hit clear filters. If you put in those 5 or 6 and nothing matches, scale them back a little bit. Remember to save your search before saving. Okay. If I've adjusted my criteria and I click save and I save my search, well, I don't know what they returned yet. I want to submit those results that I change. Do they match what I'm looking for? Am I comfortable with the search? Then we'll click save. Once you save it in the search, I didn't illustrate that, I apologize, but once you click the save button and name your search, you don't have to go through that process again. You just go into the search, it'll remember the last saved search you're reviewing. The results that appear will be based on your personal search as well. And of course, reviewed the ETFs. When screening for ETFs, remember you can remove the inverse or leveraged ETFs or include them. If you just wanted to look at inverse ETFs, you could do that as well. If you just wanted to look at the leveraged, the 2 or 3 times ETFs, but remove the inverse, you could do that also. When screening for dividend stocks, for covered calls, maybe married puts, it's easier to start with no list to open up the universe and then use that stock criteria for the bullish strategies of looking for good earnings per share growth, relative PE ratio, good average stock volume as well. All right. I'm going to navigate back to Power Options real quick. I'm going to throw up the subscription screen here. I'll come back to that. I'm going to go back to Power Options when a question come in. Charles asked, do you have training videos for what you just demonstrated? Indeed. And this one was recorded as well and will be available. Let's go back to Power Options here. At any time, when you're on your trial or if you're logged into your subscription, you can go to Home and Free Webinars. The Free Webinars link on Home, and this will take you to a wealth of options data and webinar data organized by topic. So for the Power Options tools, which is where today's presentation will be archived, you have your one-stop shop for options investing. That's just a review of all the Power Options tools. How do you find new trades? Well, today's presentation might replace this one, but I might include them both. Here's a webinar just on creating the personal stock list and using the stock list field. What to do next after we've run the search, researching and analyzing the position using the PowerOptions tools, tracking and managing your positions using the portfolio, historical options trades, and other tools. Some specifics, searching for covered calls, find the best bull put credit spread. Sorry folks, introduction to PowerOptions, focusing just on long calls and long puts, which no one was doing today. Okay. Other concepts that are available, that's just for the strategies and using the tools, some specifics, but overviews of the tools that we just saw today, Charles. Under option strategies, selection criteria for buying options, managing your long options positions. One for you those of you doing the radioactive trades, if you haven't done so yet, you might want to check out the archived webinar on the strategies for power options for radioactive positions. Here's one on introduction to naked puts and managing your naked put positions. And then of course we keep going. Vertical spreads, a hands-on look, managing your spread positions, managing bull put credit spreads, a full hour presentation on just managing bull put credit spreads as well. Options concepts, things we've thrown together here, common questions that are asked. Options exercise versus assignment. If you just have a long stock position that's down, we talk about ideas for managing your broken stock. Weekly options, the basics, and a little bit further insight. Implied volatility, full presentation on IV, full presentation on the Greeks as well. Every Friday at 4:30 p.m. Eastern Time, we host the open forum Q&A session. And our requested topics, what that means is that I join the webinar at 4:30. I don't know what material I'm covering. The attendees just ask their questions, and then I just go through that as well. I take all questions on the fly. So last week's was, or 2 weeks ago, I haven't posted last week, so I apologize. Rollouts, credit spreads, back spreads, and strangles. From 728, managing calendar spreads, stock lists, repair trades, best ROI. The week before that, radioactive trading insight, collar trades, radioactive trades, and more. 5 ways to manage your credit spreads, conservative strategies, so on and so forth also. Okay, now, that being said, Charles, this is actually, sorry, a public page, by the way. Sorry, I had an extra space in my link. I'm trying to send everyone my apologies. All right, so the link here is poweropt.com/webinars.asp. This is a public page. You don't need to be logged on to Power Options. You don't need to be logged in your trial account. You can go to that link and you'll be able to sign up for our live webinars or scroll through all of our archived webinars as well. Terry had a follow-up question related to radioactive trading. If you subscribe to Fusion, do you have access to the Power Option website, or is it an additional cost? It is an additional cost, Terry. They're 2 separate subscriptions. The Fusion subscription allows radioactive traders to see my personal radioactive trades and Ernie's trades. Kurt has some lessons there to help enhance the learning curve for investors who buy the blueprint and are trying to learn the techniques. There's a basic RPM report which shows you numeric put positions, which is essentially the PowerOptions Search criteria and the PowerOptions Search tool displayed on radioactive trading. There are Fusion members only webinars, so content we discussed just for Fusion members only are listed there, and that's what Fusion subscribers get. But it does not give you the access to PowerOptions, Terry, the other strategies, and of course the portfolio tool for tracking and managing your positions. So they're 2 separate services. It would be an additional cost. And just to remind everyone, the levels of service that we have right now, the end of day service, it only updates data at the end of the day. That's $40 per month. You'll have access to all the search tools, of course, and then the further research and analysis as well. The 20-minute delayed service, where you get access to data updates about every 15 to 20 minutes, that's only $60 per month, or discounted of $660 per year. And then, of course, we do have a real-time service. Real-time service is $100 per month, and discounted annual cost is $1,100. And of course, again, the historical data, if you wanted to do back testing, is just $40 more for the 20-minute delayed, so that would bump it up to $100 per month with 20-minute delayed at historical, and the real-time would bump you up to $140 per month for the real-time data in your current searches and the historical back testing tools as well. All right, well, I did not see any further questions come in. I want to thank you all for joining me this afternoon for today's webinar. If you do have any questions, please feel free to email me to support@powerop.com. If you have a question for Kurt Frankenberg or about the radioactive trading techniques, you can send an email to support@radioactivetrading.com. We're also available here in the office during market hours, so you can give us a call toll-free if you live inside the U.S. at 877-992-7971. If you live outside the U.S., you can reach us at 302-992-7971.